Welcome, everybody. We're going to start the panel.
Fireside chat.
It really is.
It is, yeah.
Great fireside chat. Love it.
We're going to have a very intimate conversation here.
Amongst ourselves.
We're a very friendly group, so we'll definitely have a good conversation. So our conversation today is closing the funding gap from the investor standpoint. So what we want to talk about is essentially how do we bring in more capital to funds that are Latino-led, that support underrepresented founders. And with me, I have a great panel. So I'm going to let them introduce themselves. But before we get going, my name is Elian Sadiqat. I'm the Senior Director of Programs at LBAN, which is the Latino Business Action Network. We are a 501c3 nonprofit that partners with Stanford to do research, programming, and ecosystem development for Latino and Latina founders in the US, including Puerto Rico. So with that, I'll start with Cheryl, but go ahead and introduce yourself, and then we'll go across.
Great. Thank you so much. So my name is Cheryl Campos. I'm co-founder and CEO of a nonprofit as well called La Familia Foundation. We're the umbrella organization for several of the largest communities in venture. So we have VC Familia, which is the largest global network of Latino VCs with over 500. And we also have Founder Familia, which is the largest national network of Latino venture-backed startups. And so this has been something that's been a labor of love over the past 3 years, and now we are continuing to bridge lots of these different areas with a new familia coming up, so get excited for that. And then as well as my background, I am a Stanford grad too at the GSB, and a current investor at NextWave, New York City, focused on investing in AI startups in New York.
Great. Good to see everyone. It's a very light room, but hopefully people start to trickle in a little bit. But I'm Pete Amaro, managing partner at Latitude Ventures. We are a $100 million venture fund, for profit. Or at least trying. And what we do is we invest in early stage, so kind of pre-seed to Series A companies that are Latino founded, and we write anywhere kind of from $1 to $3 million checks. And my background is varied. I've been a founder, founded a company called Luminary Media, which is a podcast company. Netflix for podcasting raised a little over $100 million to go big with stars like Dave Chappelle and Trevor Noah. Been an investor for a long time in the media space, investing in companies like DraftKings and Lollapalooza. Some good fun stuff. And prior to that, I got my red badge of courage in banking, which I will never return. But it's really great to kind of put it all together and invest behind our community of Latinos. And I think really educating, with the whole purpose of this whole panel is educating the world and like the capital allocators that there's a big opportunity investing in Latino founders. You just may not know it. So that's kind of the life's mission now, to let people know and get more dollars flowing to the right places.
All right. Hi, I'm Shady DeJesus. I'm out of Austin, Texas. My family is from Puerto Rico, so firstborn Texan. I am in the venture capital scene. I'm currently on a fund strategy with Full Spectrum Partners. It's a fund-to-fund strategy through a donor-advised fund model, investing in emerging managers as well as, we call them capital activists, and so it's utilizing capital in unique ways, and they also direct invest. And so they've been doing that. They work very closely with the Chilean and a lot of LATAM for a long time, and a couple of unicorns that kind of crossed from LATAM into the US. So it's really exciting is to work on the model because we definitely need new ways of moving this money. For myself, I've been working in the microfinance through venture capital, as well as some of like White House level initiatives on moving money. And so I think it's a really exciting time is to really present what those could look like, as well as part of the Stanford Emerging Manager Program, as well as other global networks. I think it's really important, especially even for myself. We have a huge defense innovation ecosystem. There's a lot of deep tech, and I think a lot of our communities really understand like energy and climate, and so there's a really nice space for there, and there's lots of money to kind of move into those arenas.
That's great. So obviously with our panelists, we have kind of the full spectrum of the VC world and what it kind of takes to get funding or be one of those people that are funding VCs. So I know we have kind of a smaller crowd, and so I'm hoping to have a more intimate conversation. I think a lot of times with panels, we have this macro level overview. Maybe we can get a little bit deeper and share some secrets in this world and some of the things that we have to face. Because the VC funding world can be so up and down, and especially for Latinos and underrepresented funds. And so I just want to start with kind of a general question of what has been your experience, whether it's working with fund managers, being a funder of VC funds, or being somebody that's raising. What has that experience been? What are the good? What are the bad? What are the ugly? And so just kind of open conversation for the three of you.
Yeah, I'll start there. Even when capital was flush back in 2021, Latino founders still only got 1.2% of funding, which means that even when there's billions of dollars being moved, they barely got anything. And I think when times got rough, they expected the same, right? To be overlooked, to not be given this funding. And so what I thought was interesting is that they came up with innovative new ways or found alternative sources of capital just to get by. And so they were actually better prepared for when VC dried up. And so I think, one, that shows the resilience of Latino founders in general, but two, also that imagine what would it be like for a world where they actually had the right access to capital at the right time. And so as of right now, with VC Familia and Founder Familia, what we've done is we encapsulated both sides of the table so that each of them have their own spaces to talk about deals, and to talk about investors, which investors to approach that actually talk the talk and walk the walk, versus maybe those that say that they're investing in diverse founders and really don't. It's really a way to kind of back channel and also find commonalities in their experiences, because being a founder is incredibly lonely. It is one of the hardest journeys you can ever take. And therefore, when you feel like you have a sense of belonging in a place that you feel trust with others, I think that's incredible. Even when it comes down to like the small things in Slack of like, interesting, okay. Dum dum dum. Slack. Whether it's Slack, like a cafecito, one-on-one chats, people have met their potential co-founders through that, or people that they hired for their VC firms. It's the anonymous bot that we have on Slack, which, by the way, just tactical. Anybody can ask a question anonymously and get the answers, which has helped people not join funds, has helped people steer clear of other things. And so it's those types of small things that actually make a huge difference, because pasando la voz and like making sure that we all know the right things at the right time can do a lot to make our experience in this space a little bit better. So that's kind of how I took your question. But.
Yeah, I mean, wow, that was really loud. Sorry about that. I just add to that through like a personal experience on like not how easy it is, but if you have the right community, how easy it can be. So I had left as an investor to start a company called Luminary Media. And my co-founder was at NEA, a large multi-billion-dollar venture capital fund. His dad ran a $70 billion asset manager. And we had this idea for a podcast business. Like, we're going to build an app, and we're going to go hire some talent, we're going to create content, and we're going to distribute everywhere. We're going to basically do what Howard Stern did for SiriusXM. Seems like a good idea. But is it a real business? Like, no one knows, right? Like, this is before like streaming was kind of a thing. We raised a $40 million Series A. Like, this was like flush, like times, which is crazy talk. Because I was like, what? Like, they're in for 10? They're in for 10? So this idea that money can be raised quickly if you're in the right community and you know where to go, like, became very real to me. And I was like, if I went to my family, like, we ain't getting anywhere close to this. So it was a real eye opener for me to like realize that we should do the work of trying to figure out how to create that community so that ideas can be funded. The second point I'd give is like, it was okay to fail. And I feel like sometimes as Latinos, it's not okay to fail. Like, they were like, hey, like, you know what? If it doesn't work out, it doesn't work out. We lose $10 million for the family, but it's gonna be okay. we're going to be all right. You should just go out there, swing for the fences. You have our support. And if it fails and we lose our money, I have already factored that into our family math. I think in our world, it's like, you can't fail. Like, you better figure this out. You're going to leave your job where you're making X dollars. Like, you cannot fail. And it's like an unnecessary burden that I think a lot of us in our community give. So, like, giving that leniency is something that we got to do to make it flow a little bit. But yeah, I think those have been the challenges, is really getting founders to like, go for it. And not too much, like obviously some respect for capital. But I think to go for it without restriction is an important thing and challenge that I found with some of our founders. And the challenge of really raising capital quickly for great founders has been challenging, which is why we're here, right, is to provide that sense of community. So I don't know if we're at the point where we're giving anyone $40 million for a Series A. I don't think anyone should ever get that ever in the history of man. But I do think if we're like a small round to raise $5 million, then you can go to the community quickly for a quality founder and a quality idea. Like, that should happen easily. And today it just doesn't.
I'd say a lot of the journey really is understanding what it is that you want and need. So like before COVID, flying to the coast to try to figure out what other money is available and like what are stronger ecosystems that are going to say yes versus saying no. And so like that's the challenge, is if like the funnel isn't coming in the way that you want, it's like, how do you re-strategize? Because now you do have the opportunity to find what you want and like that right capital partner and who's going to help move you to success a little further. For instance, like one of these startups that I advised, it was probably like almost 8 years ago at this point, so from pitch through now, and he found himself with the $20 million strat fi. So what that is a $20 million non-dilutive funding from the government. And so it works for him because he hasn't given any dilution, he's able to do what he wants, and he's in the deep tech space. And so he's playing the way that he can. It took him a little longer, but it got him what he wanted. And so whether it's venture or it's not, like there are these new methods, and like that's the glory of some of these conferences, is that you can really start diving into like, this is the right capital that I need. And it might not be from Puerto Rico, but it might, like for instance, if you're in ad tech, like New York is definitely a place that you want to be at, because like they're the capital. And they're easier going to understand what it is, especially if you're thinking 10 years ahead from now. And there's going to be someone to put that money in.
That's great. And David's such a team player. Joining us, he was on the reverse pitch and then came. I asked him if he could join. So, David, if you want to do a quick introduction, and then what we were talking about is kind of what's the good, the bad, and the ugly raising as a VC fund.
Oh boy, wow. How long do we got? No. So David Lavencia, all my family's from Puerto Rico, grew up in the States, senior tech executive, angel investor. I've invested in 80 startups, 3 unicorns, 10 over 100 million in valuation, 12 or so that are no longer with us. I learned just as much from the ones that are no longer with us than the successful ones. Through that time, about 4.5 years ago, co-founded an organization called Angeles Investors. We find, fund, and grow the most promising Hispanic and Latino startups based in the U.S. It's gone on to now be one of the largest, fastest growing angel investing groups in the U.S. A year ago or so, we launched a fund, $25-30 million fund, focused similar spaces, but very more direct in the seed stage. Our angel investing group will invest in a lot of different stages, but our fund is focused on the seed, B2B, B2C tech, with the industry agnostic, but primarily in fintech, media, logistics, deep tech. Wife, 3 kids, dog, live outside of Chicago. My wife's from Medellin, Colombia, for those who are Colombian in the audience. So on the fund side, raising a fund, it's interesting because like, I see a lot of startups, right? And there's a lot of similarities, right? You have a deck, you're pitching it all the time, you're trying to figure out who are the right people to pitch. You're getting told no a lot. And but you have to, just like a startup founder, you have to keep moving forward. The toughest, I'd say one of the toughest things are in the space that, and there's a lot, and I invest in a lot of different things, but our angel group and our fund is Latino focused. So for the most part, what we found is the market who likes to invest in our fund, most of our limited partners, individuals, are LPs, and we have banks and all that kind of stuff. But for the most, 90% of our limited partners are Latino because they get it, they understand it. So our market is very focused in terms of who we're raising for. But when you look at that market, and it's primarily in the United States, I think 99% is U.S. based. The hard part is it's like this is a new asset class. They don't quite totally understand venture. If they're like me, this is the first time they've come into money. Like my parents, they lived in public housing and projects growing up, and so I'm first generation of what you call money. And we'll talk to a lot of people, and they don't totally understand this asset class. How does it work? How do startups? What do you mean I can lose it all? Yeah, you can lose it all. And this kind of risk-reward thing. So that's a bit, I'd say that the good is we ended up getting Bank of America. If there's anybody who Bank of America invests in our fund, it's industrialized our fund. It's given us a whole shot in the arm. We've had amazing investors from our angel investing group invest in our fund, which has catapulted us. Another good is we've invested in 4 companies. 2 of them have already got term sheets for markups and valuation, so that's been great for us. But it's hard. I mean, it's not, everybody, raising a fund, you think it's easy. It is, I've done interesting things, a lot of things in my life, and I'll close on this one. It's the hardest thing I've done. I've run marathons, I've been execs, all that kind. This is the hardest thing I've ever done. Thank you.
No, thank you, David, and congrats on the success and getting the fund going. I know we've known each other for a while, and so it's great to see where Angeles is going. So there's a statistics point that's often referred to in Latin, sort of this Latino fundraising, which is either 1.2 to 2% of funding goes to Latinos and Latino funds. And we did a research event earlier in March at Stanford with Jose Feliciano, who owns or co-owns one of the biggest equity funds in the world, one of the biggest equity funds for a Latino. And he was saying, look, I own $75 billion. I've raised $75 billion. That's part of that 2%. So if you take me out, that 2% is a lot less, right? Like I'm like 90% of that, right? So we know that there's not enough capital going to Latino-led funds, which then goes into not enough funding goes to Latino startups. What needs to change so that from top down, there's more capital going to Latino-led funds and then Latino startups? And so we can start in that same order.
So just to repeat your question, basically it's what needs to happen from the top down.
Yeah, so what needs to happen so that more Latino-led funds get funding so that they can then invest in more Latino startups?
Yeah, I think one, it comes from examples. I think you can't be what you can't see. And there are a lot of Latino funds out there too, but they've been so new that we don't necessarily know how they're going to turn out. And there are a few trailblazers, like Miriam Rivera is one of them, that she, quite frankly, always gets seen as like the example because she's been on this grind for decades at this point and has continued to raise and raise. And yet she's still considered an emerging fund manager. She's on Fund 4. And I saw her pitch at the New American Alliance Symposium in November. And she was on the stage pitching. And it was a very eye-opening experience for me because I'm like, wait, she's the farthest along and she's still, out here in these same spaces. And so one, quite frankly, it's to continue to make sure that we have more shots on goal with more Latino VCs. So that's why I'm excited about more and more funds coming to the space. And then I guess the second piece is actually being successful at it. Like it's not just about getting more shots on goal, it's also about making sure that they're successful in their own right. And so what we did with a lot of like LPGP dinners that we had over the past couple of years through VC Familia, which several people actually raised millions of dollars through that, which was amazing, was listen to our GPs that said that they didn't have the operational capital that they needed in order to thrive because they were so focused on just surviving and like paying their counsel, paying other things, and they couldn't pay themselves. Miriam says this too. She hasn't paid herself in 15 years. So imagine like having to bankroll all these things on your own. And so what we did was we worked with the Sorensen Impact Foundation to win a grant so that then we could give 25K grants to 8 emerging fund managers, Fund 1s and Fund 2s, so they could use that money for admin, hiring the right person, just taking a step back and having breathing room. And that to me will really catalyze some of these to have even better strategy, even better shots on goal that will then allow them to actually be those next trailblazers. And I'm really excited for this program. We're trying to do, version 2. We actually delivered everything we said that we would for this pilot for Sorensen, and so we're looking at what version 2 looks like, hopefully bigger and better.
I think people just need to know that these funds will perform. People will flock to money all day, every day, in terms of returns. And I think it's just early, so to get to have some of those proof points. So I think for more capital to flow, you need to understand what is in the mindset of the LP, where the capital allocators are, and they're in the risk game too. So from my perspective, it's showing them that there is one proof in terms of performance or there's safety in terms of the risks that they're taking on the team. So I think a different way to answer it might be is we just need to make sure that people are jumping into the venture capital ecosystem in terms of all the safe bets, Andreessen Horowitz, Sequoia, NEA, and that they can get to the high ranks and at some point realize that it's okay to take the leap and start your own thing. That happens all the time. And if there's worry about working capital to pay yourself and to build a team, that's available. So you got to provide them that. But the more people you get into those systems, the more will spin out because as you get more senior in your career, you realize that all the money is in the carried interest, which is the equity that you get on the profit from your portfolio. And if it's a big company, there's just not a lot to go around, right? So people will naturally spin out. So I think you need to foster and enrich that community because LP is going to be like, okay, so what's your background if you haven't done a fund before? It's a lot easier if you're like, okay, well, I've been doing this at X, Y, and Z company for 10 years. Here's my track record. I'm ready to go. I think that'll help. So you got to nurture that community as well.
Yeah, so with the fund-to-fund strategy, it's very similar to what they're saying because you're providing a level of expertise and network, a collaborative approach so that emerging managers can really succeed. And so that's how we win is this collaborative approach. But in a fund-to-fund, it's really interesting because we see a lot of family offices that haven't seen that approach yet, or maybe they haven't even been introduced to emerging managers. They've been introduced to just established VC. And so not only are you educating at the same time, but you're also looking for the fund. And so what's happening right now is you have the great wealth transfer, right? So both on the tax credit side and just the generation that's managing the money, it's going to be changing. And so now you're educating not only so G1 is generation 1, and then G2 is the next gen. So next gen didn't make the money themselves, so they're not really sure. There's some of them are risk averse, or some of them are trying to move their money. Let's say they made the money in oil and gas and they're wanting it to move it to another industry. Now it's how do I do it successfully, but also that amongst my peers, I don't seem like I'm not making returns on my money. And so those have been really interesting conversations, and that's where we have found a lot of success is some of the billionaire offices in the G2, they're wanting a different social capital. And so we're presenting them with a new model and a new way to kind of move the money. But it's still challenging because there's a level of raising funds that's very similar to institutional, and institutional also have just basically seen some of the standard emerging manager funds. So we're trying to move those conversations from a high level, but it's also playing ball with folks that have been doing this for a while.
So there were some great points that I wanted to just highlight off of them and maybe share a little bit, of insight there. On the first points, Miriam Rivera, by the way, Puerto Rican from Chicago, She's amazing. Like she's got like 11 unicorns in her portfolio, and she, I think, can go. If you look at per investment, like how she compares to Andreessen Horowitz and all that kind of, she's like right there with him. So that was one thing I just wanted to reinforce and highlight. The second one is like, I think we was mentioning like you don't get paid. Like you think you raise a fund and you've got all these expenses, and by the way, you don't get paid until you start. So you're taking on this risk, and you're not getting paid. And yeah, you get in the carry interest if everything works out. And you know, so this is why people think, oh, start venture. They're gonna. This is why, like, before venture firms invest in a startup, they're like, you got all this stuff going on in the background. So that was another point. On what was mentioned from Pete is. You know, performance is a definite way that we're going to get out and make the case for it, right? In terms of how do we change the you know, the dynamic here, and it's vital that we do that, and we share all the great success stories there, and then it's you talk about generate. So I believe that one of the ways we change the game is if you look at like. You got to invest in a fund or startups, right? You got to be an accredited investor, roughly $200,000, making $200,000 a year or more, $300,000 a couple, $1 million in assets, or you know, and a couple other things. But at least the amount of Latinos in the U.S. Who meet that, you're talking like tens of millions, right? Maybe millions, definitely maybe not tens of millions, but millions. And there's only a small portion who are investing in startups. So I think one vehicle is to increase the education, increase the pie of those who get that. And then my last point is I serve on the board of a company that they're kind of in the broadband tech space. They're on like I mentioned this in an earlier panel, like the family office I thought is where you went when you get in trouble, but they're on generation 7 or 8. So the way they think about like money and transfer of wealth and the next generation, these are things that I'm in the boardroom and they're talking about, you know, the next generation, how you mentor, how we spend the money, how we allocate money, and all. It's fascinating, it's eye-opening, but it's one of those things that I think as we think about wealth creation for our families and all that is just another vehicle. So I go back to the thing that I can control is like this, call it this accredited investor when in our community. I think that's a huge opportunity for us.
Yeah, David, and you actually kind of went into what my next question was going to be. So for those that didn't see Arturo's presentation yesterday, one of our big data points is that Latino business owners in the U.S. are 9 times wealthier than non-business owners. So there's this great wealth that's being created in the U.S. by Latino and Latinas that are being business owners. And when we talk to some of our founders that have created this wealth, they tell me, you know, Elian, I invest in real estate because when I have chest pain at night that I invested in something, I can go drive by it and I can touch it. And you're telling me to invest in a startup and, you know.
You may not touch it.
Yeah, like I'm touching a piece of paper that, you know, does it exist? But as we're seeing this really big wealth creation by Latinos in the U.S., one of the other things that I think correlates is oftentimes these LPs, which fund VCs, are too big for emerging managers. And so the family office is a great solution for that. So the question that I have for all of you is, how do we get more of these wealthy individuals that maybe have risk adverse or that have these issues of, I want to touch it? How do we get them to say, hey, this is actually where the biggest wealth creation's being done, and if I really want to create this generational wealth, this is where I need to get involved? How do we bridge that gap? Yeah.
We're just going to start with me.
No, yeah, anyway, we can start.
No, it's great. This is where community plays a key part in what we do, because, and by the way, I think we could take it even a step further, because women, we're even more risk averse. We want to make sure that we know exactly what's going on. We like, everything's got to be buttoned up because that's how we were raised, and we want to make sure that this money is being utilized properly, right? So there's an added element of that, and I think the best way to go about it is by having someone that has done it show you the ropes, right? That's why, like an example with VC Familia that we took from All Raise, actually, their championship program, we applied it now to VC Familia, where like senior VCs are talking to junior VCs about their struggles and about the mistakes that they should be avoiding, right? But then when we apply that to the LP side of things, there's no real community there where they can kind of do the same thing and mentor each other, right? That's a big area that we've been looking at, because at the end of the day, like, where are there communities like that could be both inclusive but also give the real talk to them. There are a few out there, but it seems sometimes a little bit more on the let's just bring all this power together and not actually, like, just talk about things but not actually do things. And it's just frustrating. So once again, we have to make sure that we're actually having these uncomfortable conversations about what this is like, what the risks are, how do we support each other, and making sure that in every room that you're in, if you are investing, that you look around, and if there's no Latinos, it's your responsibility, and it's your, I guess, mandate to make sure that there's other Latinos out there, that you, whether in your network, whether reaching out, so that they can also be a part of this, I guess, the highest risk, high risk return investment. So that's kind of how I think about it.
We don't have to go in order.
Yeah, anyone have I can go next, but.
We can break the habit. Yeah.
All right, well, I'll go. Oh, you go? You going?
Yeah, I'll go. So, because mine's about women, so we'll go there. So, it's part of the wealth transfer, right? So, the trillions of dollars, women will be the majority is handling that money. And so, what we found, whether it's in the angel side or in the emerging manager, is like women aren't in the conversation enough. And and a lot of times we find it's because they haven't been asked, and they don't know that their $10,000 check, their $20,000 check can actually go very far, or they can get educated while they're on the journey. Because if you're with an emerging manager, everyone's on this new journey together, and it's just a really great way is to understand how to move capital. And so those are some conversations, is like doing more focused on the women who will be managing money in the future and getting the conversation started now. Because it's really, really important, even for the startup side, right? Because if you imagine we're trying to promote from like a GDP perspective, right? That's where I lead from, is like the GDP matters, and the way that we build wealth in our communities and the way that we continue to push forward is championing a lot of these industries. And it was said earlier is that there are some industries where it's like 300 million to 500 million can be impacted with innovation tech. And our communities are the ones going to be able to build that future and like that technology with a lived experience in mind. And so if we can wrap ourselves around a community that can support that, the angels can support it, emerging managers can, and then we can move towards like IPO and exits in a faster path, which is what we want, right? It's like a track record showing that this works and that we can, exit companies.
I'll go next, and we can truly switch it up a bunch. For me, it's diversification education. Like, I think if you told me, hey, I've got X $100,000 to put to work, and you put it all into one, you want exposure to venture, and you put into one venture company, what are you doing? Like that's not exposure to venture, but like that might be what someone thinks, right? Oh, you just take a shot. I think that an education around like diversification with the private markets is critical. Everyone will probably make the same amount of money in the public markets. I mean, unless you're in a hedge fund, but if you've got money in the market, it's probably some ETF that's going to track right perfectly. So how do you get above the market? How do you get alpha? That's investing in the private markets. So that's education point one. So okay, what are the private markets? There's venture. So I think there's an education level around diversification, and then providing that opportunity for people, which is like, if you want venture exposure, it should be 10% in a fund of which is already diversified. But I think we think about, I think we talk about, and David's probably got the most experience here on angels coming in to particular deals. But I really think it comes around to someone's personal exposure, because to your point, if it's a big bet I'm making into one thing, you're like, oh my God, what is it? If you're like, hey, I'm believing in a team that does this for a living, I think the building that you want to touch is the actual team that you can call, right? And how's it going? What's going on? How's the risk being managed? That's the physical nature, is a team investing in a company, and that being your shot at venture. Like, I mean, literally, good luck. I hope it works out. But usually in our game, it's, one out of 100 is going to make it. So, I think that's we keep coming back to education. So just teach people.
Yeah, I think that's great. David, if you want to close it out.
Yeah, so I was just looking at my phone. So just going back, in 2023, did anybody want to take a guess roughly how much venture was invested in the United States? Anybody take a guess? There's no wrong. Well, it could be wrong. It's roughly about. It says anywhere from 170 to 200 billion, right? And I saw another data point, and I have to research it, but I think of all that venture money, I think there's only 2 or 3 firms that are getting like 80% of that money. Mm-hmm. So again, one can complain, but then one can go after it. So it's a bit about, it goes to a little bit what Pete was saying too, is like, it's this, if you're looking about Latino startups, Latino venture, I think it's a bit of selling the alpha case, the business case, like pounding the success stories, and talking to anybody, say, hey, well, kind of like, hey, you believe in this asset class? Okay, you can invest in a lot of venture firms. There's a lot. Why wouldn't you want to invest in an asset class that has, that's growth, that you have, where the economy is growing, where the demographic, the populations are growing, innovative, hardworking, entrepreneurial, and where you can get a great return on your money. And I think if you're non-Latino, you should say, that's interesting. Yeah, I'm gonna invest in AI, logistics, health, but I believe in this demographic, this growth in demographic. So I think it's a bit of telling the alpha story, the return story, and that's something we got to get better at, right? That would be mine.
I would say also, for the venture asset class, if you look at the top quartile, emerging managers are significantly represented there, and it's just like any other metrics, is that there are some players, depending on how they came into the business. If they're in investment banking and they didn't have that journey of nurturing a startup, well, there's a lot of bottom funds that are just bringing those ratios down. So the returns are actively higher in the emerging managers because they're having a super hands-on approach with the founders. So if you are in the venture class, or if you're thinking about moving into it, those are really good conversations to have with folks, is just to really see what the makeup is. Because if you're in a losing fund, or you can move it to an emerging manager fund, if you're either going to get a loss or you're going to get a win, you have a better chance.
Yeah, and just to add on to that, we're publishing a report soon, especially around the stats that we got from the SR program that I mentioned prior. And the average size of our SR winners, their funds was about 27 million, which is a very tiny VC fund compared to the average that is generally done. 27 million. In some ways, that, once again, it's frustrating that we're raising smaller amounts, but, it's network, all of that. But then on the other side, it's actually easier to return a smaller fund, right? So there might be a chance that that set them up for success for long-term longevity, right? So in some ways, it's good, it's bad, but we definitely want to monitor that number, because we hope that with more access and with more people coming into the venture capital space and investing, that they will continue to grow.
Absolutely. I want to get to some audience questions, and hopefully we have some questions, but I do want to close this out with one thing. So at LBAN, we're really keen on being honest about what's happening in our community, what's happening to our founders. We want to show the challenges, but we also want to show that there is this phenomenal opportunity for investors, for founders, for the whole ecosystem. To us, there is no better opportunity for the American economy and the global economy than Latino founders in the US. So with that, there needs to be more investment, top to bottom. And sometimes when we talk about our journeys, whether it's as a founder or as a VC trying to fundraise, it could seem very gloomy and difficult. And, like I remember growing up in a Latino household, like my mom's like, go to college, get a real job, right? Don't be like your brother, go into film. No, get a real job. It's like, Mom, he has a degree. It's like, it's an art degree.
Well, I'll talk that later in another panel. We'll talk about that.
Yeah, that's it, yeah. But there is this, I forgot who said it on the panel, but there is this sort of like immigrant and Latino-ness of like, be safe, get a good job. Like, that's why we came over here. And here you are being like, oh yeah, this is the most difficult thing to do, right? As you said, David, that's what I want to get into. What advice do you have to somebody, or what would you share? Why would you tell somebody, hey, get into the VC space, get into creating a fund, be a part of this change? Because it seems like gloom and doom, but yet here you are putting the fund together. Here you are, right? Like, so as others listen, why is it that they should do it? Or maybe they shouldn't, but why should they do it?
I'll take this from two approaches. The first one is, so similar to Pete, I am a recovering banker, and then also private equity analyst, before pivoting to tech. And I became employee number 10 at a tech startup that became a unicorn. But when I had that conversation with my mom, sorry, this PE money is going away because I'm getting paid in equity. Yeah, she was not happy at all. And the reason why I had confidence was because the person that recruited me for Republic was also Latina, also had gone to Harvard, also had done banking, and I saw myself, and I saw someone, her name is Bianca Caban, she's amazing, and in some ways it was not just a mentor but a sponsor, someone who actually believed in my capability and wanted me to be part of this giant opportunity, which paid off in equity, and it's valuable now. I don't think I would have taken that plunge if I didn't have her. And I know that sounds like a broken record of like, yeah, having someone to like help you, but like, I really think that's the key. On the flip side, for funds, right, I've been told many times to create a fund and like do all this because that's the way that you create more wealth and help and support the community. I think right now, timing is everything for a fund. Timing. You can have the best strategy, you can have the best LPs, but if you don't time it right, it's not going to be good. There's a lot of zombie funds, especially that started in 2020, 2021, that went into high valuations. Grim. Sorry, I don't mean for this to be grim. I'm just telling the truth. Like, this is, like, it's so frustrating to see, well, some of them still pretend that they're alive and well, but we kind of see through it. And so timing is everything. So if you do these things, do it at a time that makes sense. And one, not just because people are telling you to do it. You have to make sure that, once again, community, make sure you have other people to talk to, make sure that you really learn from those that have done it and why. And so I think if you have both of those sides, I mean, I've been blessed to have found great people that I'll call up and be able to have these conversations with that will give me the honest truth. And that's what we're trying to do in a scalable way with VC Familia, with Founder Familia, and soon to come.
I don't know who else wants to.
Are we bouncing around? Or
take it on.
All right, I'll go next. So listen, I think that the reason to do it has a lot to do with candidly just like wealth and what wealth can do for, in terms of influence. It's just the way the world works in terms of how it can shape nonprofits, how it can shape government, and I think in terms of the weight that our community will have in terms of population, having the commensurate amount of wealth in our communities, so that when, P Tomorrow 3.0 is trying to raise his business, Series A, that he's going to go around and find $40 million for people that have it. And they can tell him, hey, don't worry about it. Go get them. Like, that's the reason why you do it. I would say, like, if you're really thinking about it and, you have to be an entrepreneur yourself, I think raising a fund, is like you're an operator. You can't go in there just being like, I'm just a straight like investor, like I just invest and I do it well. Like, I mean, it's about people management, it's operations, it's back office, like it's culture, it's running a company. And so are you up for it? So I think you got to look deep in the same eyes that you look at your founder that you're investing in. You have to look in the mirror to see if you've got this thing that you look for in your founders, because saddle up 10 years because you're on board and you got to get it right and you got to build something good and bad. And so I think that's the only thing I would say is like building an investment fund is building a company. So it needs to get done, but you just need to be honest with yourself. If you're the one to do it, it's not for everyone because it's tough. But someone's got to do it, right? So that's why I'm doing it.
So, like, speaking on top of that, so I wanted to say if you can, you should, but not like just jumping right into it. If you're in a capacity, whether it's yourself or someone that would sponsor you in a way, find the model that works best for you so that you can be in the conversation. I mean, many folks have started off with, like $1 million pilot fund or just being supportive, a group of folks coming in who would otherwise put their money elsewhere into a model. And so the earlier that you can do that, the faster that you can kind of be in the conversation and show some of the wins. And I think that's important because the timing is right now. We have this window. We know that a lot of the first gen, like, if you have carried that torch and you do have that energy to put into certain dynamics like this is really kind of breaking down borders. Like Miriam, folks have talked, but she's from the inner city from Chicago, and I'm from the inner city as well. She was the one that inspired me. If she can create a fund, it's in one generation that's going to create unicorns, like it's a really testament to that perseverance. And there are certain peoples with those capabilities. And so if you are one of those, we really want you in the conversation, just knowing that there's a broader community there that's going to support you to the best that we all can as well.
Yeah. I would add that does anybody heard of what an ikigai is? Anybody? Show of hands? Couple. It's Japanese. It's your reason for being, right? It's what you love, what you can get paid for, what you're good at, and what the world needs. Those are like 4 concentric circles, and you want to be at the middle of them. So if you're going to, before you go into venture, you want to, am I good at it? Do I love it? Yeah, you can get paid for it, but if you don't love it and you can get paid for it, you're going to be miserable, right? So you really want to make sure that you're kind of operating right at the center, and it's a really good just focus for life. And by the way, it changes over time, so it calls for some reflection. But assuming you go through that and you say, this is my purpose. I want to create a fund, and I believe it. I'm good at it. I love it. I love investing in startups. I love the risk. Then you guys say, well, where am I financially, right? Because if you have some resources, you can kind of like how I did. I was able to angel invest along the way. You can create what they call micro funds. You can get 3 or 4 or 5 different people, find a deal, put it together, invest, start building a track record, start building some wealth, and kind of use that. If you're blessed and you have a lot of resources, well, then it makes it a lot easier because if you start out, as mentioned earlier, you may not get paid. This is a bit of a risk. You may not get paid for a year or 2 or longer, and you're hoping that you pull this off and you're able to do it. So you want to have money saved up on either side. So that would be, and I think just one thing with, I was good at investing. Well, I think I was good at investing. We'll see when these things exit. But it's more than, man, you got to deal with these lawyers. Oh, these damn lawyers are so expensive. We got to deal with lawyers. You got to deal with all this back office stuff. And it's you're learning along the way. But it is an adventure. But I'm having a blast. I love it. It is right at the center of what I believe is my purpose. And we'll see. And I think we should, right? I mean, hopefully, us on stage and others are providing an example, but it would encourage you. We need more Latinos in venture, right? To help fund our startups, to help grow the ecosystem, and help grow some wealth as well. So,
Especially on the family office side and institutional. So whether you're ready to leave or not, or you're in an advising capacity, or you know the access to the money, I like to be an advocate in that capacity, because that's where we're seeing a lot of the movement, and huge institutionals have put in emerging manager programs. So all across the board. And so they're taking the risk. We know that how challenging it is for them to come meet us halfway. And so family offices, I think, that have really big wins in their portfolio can also kind of reach back at this level and meet us halfway too.
Yeah, I think that's great. And at LBAN, we work with a lot of founders and VCs and LPs. One of the things we talk to founders about is how do you connect with a VC on a personal level? And I tell them they got to pay for lawyers too. And you can talk about how much you hate lawyers. It's an easy way to connect with them. Go on a tangent. I want to mention one thing. I agree with everybody's taxes.
Planners, yes.
Yeah. There's a lot you can connect with. VCs and startups have so much more in common than what's perceived, right? And so definitely a lot to connect on. There's a lot of great reasons to get involved in VCs, to support, to be a part of an ecosystem. One of the things I do want to mention is the average time for an exit for a company, 10 to 12 years, right? We think of these, Zuckerberg and Ubers, where they're the exception. They're, a few years after getting funded. But the typical, on the early side is 10 to 12 years. Latino funds are so much newer than that, right? Latino funds have really exploded in the last few years. We're not really going to be able to see true success until we reach a 10 to 12 year time period. So, we have to wait a few years to really see how well we're doing, but we need more. We need to ask for more, we need to get more, and we need to be more involved in this ecosystem, because this is really where wealth creation is happening. It is the greatest wealth creation that we have seen, I think, in history. And Latinos have been kept out of it. And real estate is great. ETFs are phenomenal. I love my 4% return. But the wealth creation that's happening with tech is like none others. And we have been missing out. And this is one of the things I tell people, look, if you're happy with the 4%, great. I'm not, right? And this is where the change really happens. I want to take an audience question, if anybody has any. So if anybody has a question, please feel free to ask. Yeah, go
ahead. Thank you. I have a question just open to everyone, but it's kind of two parts. In the capital source kind of ecosystem and the stage of development for our founders, what do you think the importance is of both donor advised funds and investment clubs for both founders and for emerging fund managers as they're looking for pipeline?
Yeah, so I'll take that, since we are a donor advised fund, and we do direct invest as well. I think it's really strategic and important if you're able to get aligned with a fund that does have a DAF model. It's because they're going to be able to bring in that secondary capital and also take some really interesting approaches with investing in the startup scene, right? And oftentimes, if the family office is looking for a blended finance model, they're able to get those wins as well if they love your sector. So for sure, develop your cap table to be able to kind of fit that in. I think there was a second part. I don't know if I answered it.
The other part was about investment clubs. I think David spoke about the accredited investor ceiling or floor, and just the availability of resources being a bit more risk averse or smaller in check sizes. Have you seen any importance to that, at least towards, or any history of that kind of before companies get to your fund or any of your funds as being kind of part of their traction working with Latino founders?
Yeah, they're important. You start out, you get, they say family and friends. They say a lot of us don't have. I couldn't ask my family and friends for $20,000 to get going. So maybe $5, $10, but back in the day. No, so they are important, right? And there are a lot of angel groups have different. Ours is. I'm a part of multiple angel groups, by the way. one is I'm a member of Angels. I'm a member of my alumni at Notre Dame and a couple other places. So they are important and they have their purpose. So if you're whatever startup, whatever industry is, there's likely an angel investing group in the United States that's focused there. It could be regionally, it could be industry. So they're important for, hopefully investment, but also advice, perspective, rejection. Even rejection, you should learn and get something from rejection. So they're vital. And then also, I mean, for us too, it helped us on our fund side as well. But so they're helpful. But you should. And there's an angel group for. I don't know. There's like hundreds, if not thousands, of angel groups around the world.
Yeah, and just to plug my old startup, Republic.com, you can invest in startups with as little as like $10, $100. You can pay through Apple Pay. Like it makes it very simple. And these are VC-backed startups from Andreessen, Sequoia, all that want to leverage the power of the crowd in order to fuel their marketing costs, all the other things, because when you invest in them, you become a loyal ambassador, right? You will tell everyone under the sun, you will gift it in Christmas. There are so many people that are now doing this as a marketing tool, but also you build your own track record, so you don't actually have to invest thousands of dollars. You can start investing in something that, $100. So, Republic.com.
Yeah, and I want to mention the name slips by me, but there is sort of the next version of Republic and WeFunder, which is sort of the same version but for funds. So now you can crowdfund essentially what is funding a fund, right?
Through AngelList?
No, it's Stanford grads.
TribleBest?
I think there's a couple, but it's like there's one. So essentially, it's up to 250 people you can crowdfund for a VC fund, and it gives them voting powers so that they're able to say, look at the deal flow, have a little bit more structure there. So I think now, as the SEC ruling, I think was in 2016, we've definitely moved heavily into how do we get people to be able to invest with less, which I think, again, for our community is really important. To David's point, like, I know when I had my startup, I was like, all right, well, my mom's got no money. My Tio's got no money. Like, I'm paying my Tio's rent in Argentina. Like, what am I going to ask him for? Like, hey, it's time to pay back. Like, come on. The inflation's there like 5,000%. So
A week.
Yeah, right. So I think the more that we can give access to it, I think the greater, right? And that goes in whether it's a startup to VCs, but that exposure I think is great. Okay, I think we have time for one more question. I don't know if there's one more question. No? Okay, so maybe to close us out, any plugs, anything you want to shout out, anything you want to kind of mention to the audience, and we'll close us out, and we can go, Cheryl, and then forward.
Yeah, well, if you're a Latino VC, vcfamilia.com. If you're a founder, Latino founder, founderfamilia.com. And lafamiliafoundation.com, would be, talks about everything that we do. Would love to see you at one of our events. We host the largest Hispanic Heritage Month celebration every year with over 10 cities, with dinners, happy hours, pitch competitions, all of that. We're going to have 2 major events in LA come October, so stay tuned for that. And yeah, if anything has resonated, we'd love for you to reach out on LinkedIn. Thank you.
Cool. LatitudeVentures.com. That's the plug. But I'm going to use my plug for Puerto Rico to enjoy the island. It's a very beautiful, beautiful place, and to invest in the island. I think one of my big goals, having come over to Latitude, is the thesis is we invest in U.S. Latinos. And there are U.S. Latinos right here building great stuff. And I think reinvesting and thinking about Puerto Rico as not only an island de encanto, right, to enjoy and to enjoy the beach, great, it's awesome, but an island of business and opportunity. So that's my plug.
All right. So Full Spectrum Capital. As far as this great wealth transfer, there's a lot of tax credits that are going to be expiring next year. So if you're looking to move your money, whether it's ours or another, move it into a donor-advised fund if possible with a strategic arm. That would be one of the greatest ways that you can help the ecosystem. And myself, I do a lot of advising between the U.S. and Puerto Rico. So Shady De Jesus on all social media. Love to assist in whatever way possible, if it's VC or not.
So, want to thank all the panelists in LBAN for kind of putting this on. I would say from each of you either can be an angel investor yourself, or you know somebody is an angel investor. Encourage them to do more. Encourage them to become angel investors if they're not, and they're accredited. And if they are accredited, encourage them to do more. That would be my big ask and takeaway. Obviously, analyst investors, we'd love you to join us if you are an angel investor. But again, a special thanks to LBAN, GEC, and all my family's from Puerto Rico. So it's great to give back and be back on the island and help. So thank you.
Yeah, absolutely. Thank you all, and thank you everybody. Again, at LBAN, you can visit us at lban.us. We have our research conference February, March in Stanford, where we hope to meet all of you. So thank you all. Yeah.